Yo, what's up guys? Welcome back to the channel. In today's video, we're going to talk about how to compare Lendingclub's business loans versus bank loans. When deciding how to fund your business, it's important to weigh the pros and cons of Lendingclub's business loans versus traditional bank loans. Both options provide access to capital, but the process, requirements, and flexibility differ significantly. Lendingclub's business loans are designed for speed and accessibility. Applications can be completed online in minutes, and approvals are often issued within a few days. These loans are unsecured, which means that you don't need to put up collaterals like property or equipment in most cases. Lendingclub looks at factors such as your business revenue, credit history, and time in operation. This makes them especially appealing to small businesses and startups that may not meet strict bank lending criteria. Loan amounts typically range from $5,000 to $500,000 with fixed terms and predictive monthly payments. In contrast, traditional bank loans often require more paperwork, longer approval times, and stricter qualifications. Banks may demand collaterals as well as higher credit scores or years of proven business history. However, bank loans may offer lower interest rates for higher qualified borrowers and larger funding amounts for established businesses. When comparing the two, think about your priorities. If you need fast access to funds with a straightforward process, Lendingclub is a strong option. But if you prioritize the lowest possible rates and can handle a slower process with more documentations, then a bank loan may be worth considering. That's pretty much it for the video, guys. Hope you liked it. Hope you found the information here useful enough. If you did, like, share, and subscribe for more helpful tutorials. Thank you guys for watching, and I'll see you in the next one.